Look, Nvidia has been called arguably the most important stock in the world right now. It is indeed one of the world's most valuable companies, but it's also one of the world's most crowded trades. So what did you make of these numbers and the outperformance that we're seeing on the stock?
Hi, good morning. Thank you for having me. Yeah, no, indeed, the numbers were very strong. As you noted, revenue was beat, consensus was, the guidance was given above consensus, so the reaction after hours seems fairly justified. I think investors obviously are looking from a long-term perspective and they're wondering what's next. From our perspective, it does look like momentum is likely to continue. We think there are a couple of reasons for that. On one hand, you have the fundamental drivers as discussed, like the demand for AI, computing capacity to infuse all these large language models, but also we need to think about the catalyst of the product roadmap from Nvidia themselves. So obviously, you have the H200 GPU that will be launched, will be generally available later this year, and also the B100 that was referred to in the earlier section that is also going live in the coming months. That's going to add to the current momentum. The important aspect to consider is that this strong performance is more impressive if you bear in mind that China is suffering now. The region is suffering from the export bans, which is something that Nvidia has been skillfully navigating. There is no denying that it could create a bit of a headwind for them.
Indeed, and with those US export restrictions in place, Nvidia has still been able to rally ahead and reach these sales and growth targets. But even Jensen Huang on the call with analysts was a little more bearish about the trajectory from here. You say this momentum can continue. What would you say is the most significant risk facing Nvidia right now, not just from a valuation perspective, but from a growth and sales perspective as well?
Yeah, that's a very good question. It's always important to consider what could derail the story. Leaving aside valuation, that clearly is one of the highest among the tech stocks and essentially is priced for perfection. I think one of the concerns that investors should bear in mind is first is comps become more difficult in Q2. This acceleration that Nvidia has experienced on the back of extraordinary demand for LLM computing capacity started in Q2 this year, and at some point things will start to normalize. We're not going to be experiencing these over 200% year-over-year growth rates. I mean, this quarter, the data center side of the business grew 400%. That's an extraordinary growth that obviously is not sustainable. I think from a more fundamental standpoint, the kind of the clouds that one could see in the horizon are the potential further disruption on the back of the US-China trade dispute that Nvidia so far has been navigating with products that are adapted to kind of stay within the export bans. But that is a difficult exercise that requires a lot of agility. And in the longer term, I think we need to consider the overall semiconductor industry. On the back of the COVID pandemic and what happened with the supply chain, there's been a wave across many jurisdictions of investing in semis capacity that will potentially create a glut. There is a lot more fab capacity being built in the US, in Europe, and even in Asia. As a result of that, we could find ourselves in a semis industry where there is too much capacity and the pricing is starting to be counterproductive.